Hello Warren, I am Gilles from the YouTube channel Matière Profit. Thanks for accepting our invitation.
Thank you, Gilles. It's a pleasure to be here. I appreciate the invitation.
So to begin with, can you introduce yourself and your company?
Yes, my name is Warren Gilman. I am the founder, chairman, chief executive officer of Queen's Road Capital Investment, QRC. Queen's Road Capital is a Toronto Stock Exchange listed mining investment company.
And what does the name Queen's Road Capital refer to?
Queen's Road is the main financial center in Hong Kong. I live in Hong Kong, and the one office that Queen's Road has is in Hong Kong. So think of it as the Wall Street of Hong Kong.
Okay, like Wall Street, yes, in New York.
Exactly right.
So what makes your business model? From what I read, you have a very specific business model. What makes it specifically resilient in terms of the mining sectors in which you operate?
We are very unique, and we operate in a very unique space. We are an investor in convertible debentures in the mining sector. That's our raison d'etre. We're invest in convertible debentures. And why convertible debentures? It all comes down to, before I started Queen's Road 6 years ago, I invested the money of Mr. Li Ka-shing in Hong Kong into the mining sector. Mr. Li
very wealthy investor, individual businessman.
He's one of the world's richest men. He's net worth of about $100 billion US, richest man in Hong Kong. One of the richest men in China and in the world. And I started investing his money in 2010. And Mr. Li had 3 rules. Rule number 1 was you didn't lose Mr. Li's money. And you couldn't have a down year. You had to make him money every single year. If you didn't, you were fired. So you'd have a very brief career if you bought mining equities, because mining equities, as we all know, go up and down.
Yep.
It's very easy to have a down year, especially the period to 2010 to 2019 when I was running his money. So that was rule number 1. Rule number 2 was you didn't get his money for free. You had to give him a Christmas present every year, and he didn't want to hear that the price of gold had fallen or there was a problem in the mine. Those were my problems. Mr. Li got his Christmas present every year.
Like what kind of Christmas present?
A dividend. I'd write him a check at the end of every year. I had to write him a check. And rule number 3 was this mining business, it goes up and down, it's very volatile. I need to have a return that matches the risk. So I want to have very, very good returns. So I had to come up with a strategy where we didn't lose his money, where we got to write him a dividend at the end of every year, and we got very good returns.
Whether the market was up or down.
Whether the market was up or down, that was my problem. That wasn't his problem. And so I came up with the concept of investing in convertible debentures. Convertible debentures, we're a debt holder, not an equity holder. So we don't have a problem if the stock goes down. The worst thing that can happen is we get all our money back.
Can you elaborate a little bit more for our viewers about the convertible debentures?
Exactly.
I read about it, but it would be nice.
So a debenture is a debt security, so we're not an equity holder in the company. We don't own the stock. They owe us money. We're a debt holder. As a result, we get interest payments every quarter. So we receive an income. I, in turn, pass that income on to our shareholders in the form of dividends. So Queen's Road pays dividends every year and has done since we started the company. But if the stock value of the company takes off and goes into the stratosphere, which is what we all want, we can convert our debt into equity at a fixed price, and we get all that upside.
Hence the name convertible.
Exactly, hence the name convertible. So it's a piece of debt when things are bad, but when things are really good, it magically transforms into equity, and you get the upside. So it's a wonderful, wonderful structure, and it's perfectly suited to the mining sector. Because the mining sector, as you know, commodity prices go up and down, equities go up and down. What you want to do is protect yourself on the downside, but have all that upside exposure as potential profit. And that's what convertible debentures do.
Okay, I got your business. So now that we got the basics of it, I think the main point is how to select the good businesses in which to invest.
And that's my job, Gilles.
And can you explain briefly to us what are the top three killer things in a deal which would make you walk away from an act? Can it be management or
it could
ESG
be
concerns or jurisdictions or whatever?
So and Queen's Road is extremely selective. We only make one investment a year, so it tends to be a big investment.
Only one a year?
Only one investment a year. So that shows you how selective we are. We want to have an absolutely great ore body that we're investing in. And great ore bodies are easily mined and are high grade and are in a relatively safe country. So we need all of those things. But we're not just investing in the ore body, we're actually investing in the company. And so the company has to have a strong management team that is trustworthy. And that's where the experience lies. The experience lies in, I'm a mining engineer, so I can tell whether it's an ore body that's worth investing in or not. And I'm a mining engineer and a banker, so I can structure these things appropriately. And I've been dealing with the mining community for 40 years, 50 years.
Okay.
So I know all the management teams. I know the good ones and the bad ones. So I select the ore body, I select the company, I select the management team. You need to check all of those boxes before we will make that investment in your company. So what are the main things that would stop us from investing? All of those things. It has to be a great ore body, it has to be a great trustworthy management team with a track record, and it's got to be in a relatively safe place. There's no sense investing in a country where 10 years from now, when your mine is actually in production, you find out that someone's stolen it from you. As Mr. Lee said, when I was investing his money, he would say, Warren, I really don't need the money. I've already got $100 billion. My sons really don't need the money. They're going to be okay. They're going to inherit the $100 billion.
And the grandson too?
They said, I worry about my grandchildren because I won't be here to look after them. And I want you to invest in things that when my grandchildren are adults, we still own them. In other words, some government hasn't come along in the ensuing 20 years and said, oh, that's a great asset, let's steal that, we'll take it away from them. So think of it as investing for your grandchildren. And I took that lesson into the establishment of Queen's Road, and I always invest as if I'm investing for my own grandchildren. So that means safe jurisdictions.
Okay. I just want to follow on our question. You said just one deal per year. How many deals do you look at? How many companies do you look at?
I'm, again, very, very selective. So as you know, there are thousands of resource companies in the world. And what I do all day long is read press releases. I've constantly, 100% of the time, on Bloomberg and on the various websites that allow me to follow the industry. But I really only look at 10 or 20 ore bodies.
Okay.
Those are the good ones. I always have a list of the 10 or 20 that I want to invest in, and those are the ones I follow. Those are the ones that I constantly bug management about doing a convertible debenture investment with me. And all the other thousands of companies, I don't really need to spend any time with them. So very, very selective. It's actually quite an easy job when you when you become so picky about the investments you make that there's only a handful of companies that you want to invest in, it makes your life relatively easy.
So mostly you own convertible debentures, and sometimes you get into equity because you see that the stock is taking off.
Our convertible debentures are generally 5 years in maturity. So I hold that piece of debt for 5 years. At the end of that 5 years, hopefully the stock has moved up. We convert into stock and we become an equity holder. That has actually happened because the company is now 6 years old. So the investments that we made in our first year, we've now converted all of those, and we're common shareholders in those companies. So you can actually see, when you look at our presentation on our website, we describe each investment that has already matured and converted, and you can see the returns that we've made. And the returns on every single one has been between, at the low end, a 30% IRR, and at the high end, a 70% IRR. So every single one of our investments that has matured, we've made tremendous profits.
Indeed.
And we still hold a lot of those equities today. You know, for example, in NextGen, which was our first investment, we have $150 million in common stock of NextGen. We paid $15 million for it, so we've made 10 times our money. ATHA Energy was our second investment. It was a very small debenture, a $6 million debenture. We've converted that $6 million debenture back in August of 2025 into $35 million of ATHA, which is now worth about $45 million. So we went from 6 to 45 million in our second investment. Our third investment was Adriatic Metals. Adriatic got taken out in a takeover bid by Dundee Precious Metals. And we still are a big shareholder in Dundee Precious Metals. Gold Royalty, we've converted our Gold Royalty convertible. We had a 30 million convertible. We now own $90 million worth of Gold Royalty stock. So you get an idea. We invest this much money, all of our returns, we've made this much money, and we still own all that stock.
Let me rephrase for our viewers. It's between 30 and 70% per year increase.
Per year?
Yes, per year.
Exactly right. That's what IRR means, internal rate of return. That is an annual return based on the money that you put in versus the money that it's currently worth. And it's been either 30, at the low end 30, and the high end 7, and that's every single investment we did to date in this company.
Does it happen that some of the companies are okay to expand debt, but would not be willing to convert? If that's the case, you walk off the deal?
It's a legal document.
It's
the
a legal
convertible debenture is a legal obligation.
Okay.
They can't refuse it. We have the right to convert, and they can't stop it. So
this year you made an investment in ATHA.
Yes. Our most recent investment closed just 2 weeks ago.
2 weeks ago. It was a $25 million.
It's a $25 million convertible debenture. They pay us 12% a year.
12%.
So we're making a good annual return on that. The stock has gone up. The stock actually went up about 40% even before the deal closed. Our conversion premium is a 30% premium, so we're already in the money in our debenture, meaning that the stock price is already significantly above our conversion price, and the deal just closed 2 weeks ago. So we're in the money on the conversion, and we still get 12%. And one further thing, Queen's Road is now becoming a reasonably large company. So we have to write bigger and bigger convertibles.
Yes.
We started 5 years ago doing $15 million investments, $10 million investments. Now we make $70 million, $50 million, we make much bigger investments. ATHA was only a $25 million investment because it's a relatively small company. But I told the CEO, $25 million doesn't move our needle very much. If it's a huge success, it won't make that much of a difference in Queen's Road's share price. So I want the ability to double the size of our investment and make it a 50 million convert, which he agreed to. So I have a 2-year option to double that investment from 25 million to 50 million. And a 50 million convertible into ATHA will be material for Queen's Road share price if it winds up being a huge success.
Of course, absolutely.
So that's the first time we've done that. It's unique and it makes it material to us.
So if I may ask, at what time do you decide whether you want to convert from debt to equity? Now you're in good position. You can still have the revenue from the debt, or you can swap it.
Yes. First of all, we can convert at any time during the life of the debenture. So over the course of the 5 years, we can convert at any time and any amount. We could do all of it. We could do 10% of it. It's totally in our hands. We totally have the option. So those are our rights. What I tend to do is I tend to hold on to the debenture for the whole 5 years because I like receiving that income every quarter.
Yes.
Why wouldn't you? Keep getting that income. So we tend to hold it right through to maturity and then convert, unless there's another reason to convert it.
And when you convert, is it at a price previously agreed, or is it at the price of the market?
It is at the price that we decided the day we made the investment.
Okay, it's not at the price of the market when
it's not the price at the market. No. It's the price when we made the investment 5 years ago. So it's 5 years ago's price, not today's price, and that's locked in. That never changes.
Okay, so we have been talking about precious metals. There is, as you know, renewed interest in energy since the artificial intelligence boom, and there is a renewed interest in uranium stocks.
Yes.
Can you tell us about your strategy in this sector?
Yeah, I've been a very early investor in uranium. Going back to 2016, 10 years ago, when I was investing Mr. Li Ka-shing's money, we made our first investment into NextGen. We did a 50 million convertible debenture back in 2016. That was 10 years ago. The uranium price, I think, was $17, $18 a pound. Well, of course, now it's $90 a pound. NextGen then was a $500 million company. Today it's a $10 billion company. A lot has happened. A lot of money has been made. But yes, I've been investing in uranium for a long time. So 2016 we made an investment, 2017 we made another investment in NextGen, and when I started Queen's Road in 2020, what was the first investment I did was NextGen, uranium company. What was the second investment I did? ATHA Energy, a uranium company. As a result, Queen's Road's portfolio today is about 50% uranium. So we're heavily weighted into uranium, then 25% copper, and then 25% gold and silver. So those are the three things that I'm invested in, and those are the three things that I will always be invested in. And I'm very bullish on all of them, and have been proven right. Gold is at a record high, copper is at a record high, uranium is on its way to be a record high, but it's still got a long way to run. And that's probably why the last investment that we did, as recently as 2 weeks ago with ATHA, was another uranium name.
Yes.
Uranium price obviously has gone from $20 to $90, but it's easily going to go from $90 to $200. So I'm very comfortable putting more money into the uranium sector today because there's still a lot more room for the uranium price to run.
Okay, yes. Good to point, because I thought you were mostly focused on gold and silver companies, but turns out you're mostly into uranium.
50% uranium, 25% copper, 25% gold and silver.
Okay.
It's 50% uranium in part because of our success. Those names have gone up tenfold. We've made 10 times our money, so their weighting in the portfolio has increased. Longer term, I would expect we'd be sort of a third between uranium, copper, and gold and silver.
Okay, let's talk about dividends now.
Yes.
You have announced, if I'm not mistaken, that your dividend was increased by 10%. You are going into a semi-annual dividend policy.
That's right. You've done your homework, Jill.
I've done my homework.
You have.
What's your dividend policy, and what do you plan for the future?
So we've paid a dividend every year since we started this company. Not many companies have done that. Not many companies can do that. Our very first year of operation, we paid a dividend, and that dividend has gone up double digits every year for the last 5 years. We used to pay that dividend every November. As I said, it was a bit like Mr. Lee's Christmas present at the end of every year. And so it was my Christmas present to the Queen's Road shareholders. We're now moving to a semi-annual dividend, so we'll now pay our dividend once in May and once in November. So you'll get a dividend check twice a year. That dividend check will go up double digits. How can I say that? I can say that because the great thing about our business model, I can tell you precisely what my revenue will be this year. I have 218 million convertible debentures outstanding, 218 million US dollars. They pay me on average 10%. So I know that the income to the company this year will be 21.8 million US dollars. That's roughly 30 million Canadian dollars. And right now my dividend payout is about 10 million Canadian. So I have plenty of money to increase my dividend. I could actually triple my dividend. I currently pay 10, and I have almost 30 million coming in the door this year, and next year, and the year after that, because these tend to be 5-year debentures. But I don't want to triple my dividend. I am making a lot more money reinvesting all that capital into new convertible debentures. So I will grow the dividend steadily at about 10% a year, as I have done for the last 5 years. I'll do it this year, and I'll do it next year. I'll continue to have just a nice steady increase in my dividend.
Okay, that's great. My last question was about to be what makes QRC stand out among other companies, and why would an investor choose your company rather than gold ETF or something like this? I think that you mostly answered these questions. Do you have something more to add?
Well, I would just emphasize those points, that it is a unique structure that protects you on the downside. If you buy a gold ETF, for example, if the price of gold drops, you could lose your money. Theoretically, you could lose all of your money. With Queen's Road, you won't, because we own debt.
Yes.
We don't own the gold, we own debt. But if the gold price takes off, we get a lot of that upside. So it's a conservative way to protect your capital, get exposure to all that upside, and get a dividend payment every 6 months while you wait.
Yes.
So for people who aren't experts in the mining field, they should leave the investing to me. Just buy Queen's Road. I'll invest your money. All of my backers are all billionaires, and that's what they do. They trust me to invest their money. They're not mining people. They say, Warren, we want exposure to this sector. We're going to give you our money. You invest it. We'll get a dividend from you, and we trust that you'll give us capital appreciation over the long term, because you're the mining engineer. We're not. You know where the good ore bodies are, and you know how to pick great management teams. So I would encourage all of your viewers, Jill, to do the same. Do what the other billionaires are doing. Just invest in Queen's Road and let us invest the capital for you.
As you said, I have a very, very last question. Your structure is very unique, very, very specific. Did you take inspiration from another company, or did you invent it by yourself?
No, this was necessity is the mother of invention, as they say. And when I started investing Mr. Lee's money, one might say it was a poisoned chalice for many people, for all people. A mining engineer, an mining investment banker like myself, getting access to the bank account of one of the world's richest men to invest in mining projects would be a dream job. It's a dream come true. But the dream came with some very significant handcuffs, which was, don't lose his money, pay him a dividend every year, and give him fabulous returns. And if you don't do that, you're fired. And he meant it. I saw him fire people immediately. People that worked for him for 30 years. If they had a bad year, he would fire them. So it sounded like a dream job, but it could be a very short job, and it would end your career because it's hard to get another job if Mr. Lee fires you. So I had to come up with a strategy that would serve his demands. The result is Queen's Road.
Okay. Thank you very much for your time, Warren.
It's a pleasure. Absolutely. Thank you for inviting me.